I knew this was going to happen. And I said this as well, that when they do start running, all of the perma bears are not going to understand what's going on, and they're going to all congregate online on Twitter, and they're going to shout, the market's going to crash, the banks are screwed, market's going down. No, it's not, and there's zero justification for it, which is why you never see any documented factual evidence surrounding these claims. Now, I want you to look at a few things. Number one, right here at the tip of the year of 2021 into 2022, we start trending down. Now, what has not been trending down this whole year? Let's take a look. Let's do this PowerPoint style so we can keep track of what we're doing. This is going to be a very brief one. But again, I mean, I know that some people out there have looked into what I've been saying, and hopefully they are playing the right side of this. Because again, if you don't have a reason why you're playing the side you're on, you probably shouldn't be playing it. Because there's no reason to. Other than you, number one, read headlines online, or you listen to people online, or you watch somebody on YouTube that claims to be a professional, but they're on YouTube. And number five, it's just not going to fucking happen. And I'm going to show you why. Unlike the other side of the argument, you're going to get reasons why from me. And I've looked into this. So the biggest reason is the fact that we have a reverse repurchase operation headed by the Fed sitting here at $2.26 trillion. Now, let's put this in corner here. Let's look at the futures market right now. Futures are up another 86%. Who would have thought? That's just crazy. Next we have, let's see here, repo. We have the futures. Let's look at the reverse repo history. That's also very, very important. So what we're going to do here, that's Shilly, we're gapping again. Fuck! I know, that's exactly what they're saying because they don't know what's happening. Let's take a look at this. So the going theory, based on my personal research and the documented evidence that's all around the internet, that's public information. If you take the repo numbers and you do a rough calculation starting from October, so it's to my knowledge that the repo demand is the inflation that's been very strategically engineered as they raise the interest rates because what? They're hoarding cash, making interest on it, raising rates, which increases the amount of interest you make on it. The Fed's holding the cash, the money market funds are holding the treasuries, and all the assets. And to show you this, we're going to go to Fintel real quick. Everyone loves Fintel. 13F. We're going to do, let's just do Vanguard Group and look at their portfolio. So, their portfolio value is $3.5 trillion as of today. Let's look at BlackRock. We're just going to use these two. And then we're going to look at a couple of banks. And BlackRock's at a $3.1 trillion assets under management holdings. So we got Vanguard, Fidelity, not Fidelity, BlackRock, Vanguard. We have the futures that are up. We have the repo that, if you do the math, let me check my history here so I don't have to redo all that. I'm going to have to redo it. Okay, I'll just do this real quick. So if we started with 22.46 billion, which amounts to over 2 trillion, 2.246 trillion, we're going to take the number we started with on the 3rd, which was 2.52 on the 3rd. And on the 3rd, we took out 173.39 billion. So actually, we need to start from the 30th. So we're starting from negative 173.39 billion at this month. We're starting from there. So we take this and we subtract it from our starting point of 0. And then we just go down this list and we subtract 1890. We subtract 282. Then we add 2. Then we subtract 585. Then we subtract 447. Then we add 2473. We take away 3.11. We take away 2205. We take away 4975. And now we add 54.43. So this month so far, we're sitting here on the 18th of October. We have taken out roughly $200 billion out of the repo. Now, if we look at the total as of today, it's $2,226,000,073, right? So if we know that the Fed's inflation target, which the theory is, remember, that the repo is the inflation, which, hold on, let me go back to that New York Fed chart real quick. Where'd it go? I have too many things open. So we have, this is today. I may have, I'm baked as hell. That was there. I didn't even see it. It was right in front of me. Don't do drugs, kids. But anyways, this here, if we know that the inflation target is about half of what it is now, which if the repo is the inflation, then one could assume that it would be half of the repo. So we take the amount, roughly 2,226 billion, and we divide that by 200, the amount that's been taken out this month so far, and that's 11.13. Now what that means is we would have to drop the repo by 200 billion 11.13 more times to hit the inflation target. Now, if we do the math and we look at SPY and how much it's been up in that 200 that was taken out, it's roughly 3.2%. Right? So now we take this number here and we divide it by 2 because that would be half of the repo. So about 5.565. So let's look at SPY real quick. I don't know if you caught Netflix after hours. Holy shit. Okay, so on the daily we're SPY. Let's look at what we've done. Oh, that's not SPY, that's S&P. Let's look and see where the price has ended from this month. So starting on the 3rd, let's do the weekly to make this a little quicker. So this candle here is the end of September, so we're starting here. So the close of this week was 362.79. I'm just going to go and use this calculator real quick. It'd be a lot easier. $362.79. So 362.79. Where are we at now? We are at 370. Where are we at after hours? 370.406. That's pretty damn close right there. So I'm 3.2, right? So we ran 3.2% in the amount of time that it took to reduce the repo amount by 200, which gets it closer to the inflation target. So I'm going to make a few more slides here and mix all this up. Let's just go. We're going to save the futures for last. So we have repo here, repo amount here. $200 billion equals roughly 3.2% upside, because again, short interest. The repo is, whether you like to believe it or not, you can go read this from the Fed. It's an operational shorting mechanism if it needs to be, which clearly, looking at the market, everything's shorted halfway. I mean, you can go run any command. I know people are out there watching that have Discords. Go run your short interest commands. Go use this stuff. And look, you can basically type in whatever you want. Let's go GoPro. I don't know, that was the first random thing that came to my mind. Everything, you're going to see this here for most everything in the market. It's going to be 50% shorted daily from a volume standpoint, not a short interest standpoint, but from a daily short volume standpoint. Half of the volume is short. You go look at the order flow analysis in your Webull app. Have you ever seen a day when the stock's green but there's more outflow than inflow, or a day when the stock's red and there's more inflow than outflow? It's because the market's backwards, because everything's shorted. If you have to collect all the real shares because you have to cover, everyone says billions and billions of synthetics, how do you think they're going to pay for it? The fucking repo, dude. That's where all the cash is at. They needed the interest rates to go up so they could earn more of it faster. But anyways, someone gave it a random thumbs up. Oh, where's the money? Good shit. So anyways, the market's shorted. It's obvious. You can't deny this. SPY's got 3 days worth of short volume, or short interest rather, that it's got to get out. And it's only been going up. Except I think it did dip this last report. So anyways, $200 of repo equals 3.2% of SPY run. So basically, if we go back to the chart and we look where we started this month at, let's go back to the weekly here. The opening for this month was 361.08. 361.08. And we are currently sitting at, as of close, I'm not going to go off after hours here. I'm just going to go off the normal close, 371.13. $371.13. Don't worry, I'm going to put all this together in a second. So if you're confused or whatever, just skip to the end and it'll make more sense. I'm putting this all together. I'm just showing you the thought process of how I go through all this stuff. So that's a 2.7% difference, roughly. Wait, hold on. I need to do percent change, sorry. 2.7. Okay, so 2.7. So if we are going to do this, what was it, 5.5 more times because of the inflation target that we calculated using the calculator? If 200 billion equates to 2.7, and we need this to happen up to half the amount of what's in there now, which would basically be 1.1 trill, then that's about your 5.5 that we calculated. So now you take 2.7, or not 2.7, this is what we're going to do. We're going to walk it up using that calculator. So where we're at now, and we're going to use the after hours price for this, we closed at 374.06. So let's just do the math real quick. So what we say, 2.7, and we got to do it 5.5 more times by the end of this year. So 2.7% from this price would be 384. That's 1. 394, that's 2. 405, that's 3. 416, that's 4. 427, that's 5. Half of that would be right around that 430-ish mark. Now, you go back to the daily, and you look, where is the corridor? Well, it's right around there, just around that location. So, end of year, sure, this may be the target. But my thought process is that due to the significant amount of short interest, they're going to overshoot this. Due to the severe amount of volatility that's been held up in the repo by the Fed for the better part of the last 2 years, it's going to contribute to the upside, which is exactly why you see low IV, deep out of the money, the further out you go. Right here, look, at the money, 28%. Go down, 24%. That's not normal. They just changed this because of a filing out of the OCC. And they made the options market pro-cyclical. I'm pretty sure if you go to Google and you just type in OCC, or I'm sorry, type in pro-cyclical in quotes and then do OCC. Nope, it doesn't work. Well, let's try my custom built search engine. Hold on. And for those of you in the group, I just used the search feature. It's badass. Oh, I forgot to put the mention sign though. Where is it? I know I put it out here. Right here. So this is in the custom search. Let's just type in pro-cyclical. Options. This is Mobileye Global. Okay, that's just a random company. There it is, right here. Yep, right here. This is when they changed the IV model. Right here. Options Clearing Corporation, order granting approval of proposed rule change concerning the Options Clearing Corporation's margin methodology for incorporation variations, and implied volatility. And then you got interest rates hiking as well, which contributes to RHO, which is a Greek, which has to do directly with the interest rate, and it's been affecting these calls. But yeah, I mean, it's all part of it. You can't just sit on Reddit all day and act like you know what's happening in the stock market. All you're doing is you're getting sold by the media, the industry who's infiltrated social media, and are now using you to help them get to their goals, like dematerializing the stock market from paper certificates, which is exactly what you do, on top of giving up your insurance when you DRS. So, more power to you. But anyways, there's no justification for the market going down. They had to do this. They had to. Because guess what? The market's been going down. Inflation's been going up. Market's been going down. Inflation's been going up. We're going to put all this together right now. In this one slide. You're going to see it all right here. This is the inflation. You don't have to believe me. This is what I think based on the research. It's all right here. Everything correlates around this repo. The timelines and everything else. Crypto and everything else, it's all repo related. All of it. There's treasury bills that are backing Tether right now, for God's sake. So anyways, you got this. That's your inflation. You got this. This is your problem. Everything was too overvalued because what happened back here? But, well, between here and here, we had stimulus checks, right? We had 4 stimulus checks go out, which then the Fed altered their policy to allow for savings deposits. Specifically, only during this time. And it's funny enough, it was called the supplemental leverage ratio, which allowed for this endless leverage from the institutions, which is why you see these massive portfolios that I just showed you right here. The 3 trillion size portfolio from BlackRock and Vanguard. It's because this happened in 2020 and it's part of 2021. The stimulus checks went out, the bail-in went in, they bought up everything, they started lending everything out to the big banks that didn't have the assets because they had bad collateral, and then the money market funds cleaned house using the Fed as the right arm. And they wrote about this in 2019. All of this is factual evidence. All of it. It's all written about, documented, planned, and no one saw it because they're too busy spending their time on Twitter, listening to everyone that doesn't know what they're talking about. And no disrespect to AMC Bigums. I like the guy. He's one of the more respectable ones. But you have no evidence for this. That's why you just say that the banks are fucked and you couldn't be happier. Assets being sold left and right. But what you don't realize is that they're not being sold. They're being deleveraged. There's a huge difference. There's a huge difference. So, again, you can continue to participate in the bear narrative, but you don't have any reason for it other than you're going to show me something that someone else said, but you're not going to show me the facts. That's the problem. That will always be the problem. So again, let's go over this one more time. You have inflation right here. The repo is the inflation. You have the markets. Let me switch this side. Now that we know that why the markets ran in COVID, because stimulus checks, inflation's going up. Portfolios are somewhat going down. These have actually been going down, which makes sense because they're deleveraging. They're not going out of business or going bankrupt. They're deleveraging. So anyways, inflation's going up. Market's going down. But there's a problem because there's another aspect in all this that is still going up with inflation and as the market's going down. And that's your fucking short interest. So, up. I need to take a picture of the short interest here. This has been going up. Oh, I mean, I have a SPY short interest command right here. Hold on. I don't know if I programmed the historic, though. Of course, it's not going to work because I'm streaming. Bastards. Anyways. Okay, so you have 50% of the market shorted. Short interest has been going up for SPY. This is as clear as day. You can go look in your brokerage app, see this. Portfolios, trillions of dollars. If you add up the aggregate of BlackRock, Fidelity, and Vanguard, it equals the balance sheet of the Fed. So it's no doubt, we know BlackRock's big. We know Vanguard's big. They have over 6K, 5K positions each. They're helping the banks out by lending all of the real shares while they finance the dog shit. And then there's so much more that goes into this, but from a general basic standpoint, all you have to do to disprove this bear narrative, other than looking at the midterm schedule, it's a whole nother thing, is look at the inflation, look where it came from, and look at the ramifications for doing that, which is this right here. Shorting the whole market to segregate collateral and engineering inflation because you need rates to go up, because you need more money to pay off and finance the dog shit, that has consequences. Because again, the Fed's been holding all of the volatility. That has to come out. If inflation wants to come down, this has to go down, which is exactly why it fucking hasn't. That's why this is still up. That's why this is still down. And that's why the short interest is still there. Because this cannot come out until this comes out. And until this comes out, this has to come out. So it's all related. One can't happen without the other. Inflation's caused by the repo. Inflation is the repo. The reason it hasn't came down, it's been basically trading flat for a while, along with this, is because it's all operational. So, I mean, again, you can think the banks are going to crash, but let's look at Goldman Sachs' portfolio real quick. And you see how I'm just going to Google and I'm typing very simple English words? More of y'all should start doing this. You will learn more than you will learn being on Reddit. Yeah, it does not look to me like they're fucked. Not one bit. That's just a graph, though. Still buying up positions. These are 13 Gs, too, by the way. So, yeah. Like I said, the Fed's holding what? The cash. Well, what's Goldman holding? As you can see right here, the treasuries, like I just said. Convertible notes, energy bonds, convertible zero bonds, Octa Incorporated, convertible zero, convertible note. And then on top of that, you got ETFs that they're holding, which are allowed to lend to each other because the SEC allowed this. So none of this is illegal. They're just, honestly, they're doing what they always have done. So I don't know why you're buying the bear narrative. There's no justification for it. You can say billions and billions of short interest or billions and billions of shorts, but what do you think the repo has been? They've been operationally cleaning all that up since, you became an ape. Or should I say branded an ape. And I'm not trying to, dog on anybody that's an ape. I was a fucking ape too. Like, I was in the same boat. You just have to think your way out of it. And sorry for being the guy that's trying to, turn on that light bulb, because once you do, you'll be pretty fucking thankful that you're not in that group anymore. Because, again, this has been an insane time to learn about these things. With all of these tools available at your disposal, all these graphs. This is a graph in Netflix today. We captured the time and sales data to get the price, the most bought price. It was $267.57 by a lot. So it's things like this. This is how you fucking learn. You don't learn by going on Reddit and reading the same shit over and over and over and over and over again. That's called a psychological loop. They just send snippets of shit. Context, quote mining. Take pictures of purple donuts. Oh, and if anyone has been revelated by this video and have DRS their shares, please look into the fucking risks. You just gave up your insurance. You think the market's going to crash, and for some reason that's a good thing when you don't have insurance to protect your GameStop shares now because you bought this shit? Like, bro, no one fucking cares. You don't understand what you're doing. None of them do. So, again, do you want to make money? I thought that's the whole point of being in the fucking market. Or do you want to play this game where you're an ape and you just get shit on and shit on and shit on over and over and over and over again? When did DRS start? It started in, let's see, September of 2020. I'll never forget it, because that's why this group that I made the group that I have because of this shit. Because I saw the level of PSYOP narrative in this bullshit, and then look at the stock since then. It's gone nowhere but down. And they're claiming victory. And you look at the float, not even 70% is owned by retail. So, where's the arguments? That's what I want to know. There are none. So, do what you do. I'm going to do what I do. But, again, hopefully one day you'll look back and be like, oh shit, he was actually trying to tell me. So, anyway, I have nothing to gain here by making this video. Like, 5 people will watch it. 3 of them will leave shill comments that I'll never read in the comments below, which I find hilarious. And most of them are bots anyway. But the point is, I got to get this out. Because if I don't, then I go crazy. Because, when you have no arguments against it, but you see all this conviction online and on social media about the market crashing, it goes to show how clueless people really are. That was the game. You were brought into the situation that unfolded in 2021 because they needed a finger to point, and they pointed it at you. You could have sold once. You could have sold twice. I could have sold once. I could have sold twice. I didn't. I fucked up. I got had. They got me. They got you too. They got all of you. Now, it's up to you whether you're going to accept that and move on and try to better your situation, or you're going to just say, well, I'm an ape because reasons. I'm going to do what apes do because reasons. And I'm never going to have a justification for it. Hey, man, whatever you want to do. But until then, have a good one.